Hey everyone, thanks a lot. Last session of the day, and with the juggernaut of decentralized finance. So we have the pleasure to receive Tasha from Alpha Finance, Nicolo from Aave, and moderating by one of the OGs of decentralized finance, Felix from Dashnext and Futerio. So thanks again for everyone staying tuned all day. And this session is quite a quality one. So thanks everyone. Felix, I will let you moderate the panel, and I will talk to you at the end. So thanks again for joining.
Thanks for having us. Thanks for organizing this again. It's amazing to have you all, and pleasure to meet you, Tasha, Nicolo. Great to be here. So
thanks for having me too, Felix.
Fantastic. Let's talk decentralized finance. Maybe we start just with a simple one. Introduce yourself, Tasha. Please go ahead and let us know who you are.
Yeah, sure. So I'm Tasha, co-founder and CEO of Alpha Finance. Previously, I was a head of strategy at Band Protocol, and then spent some time in as a product manager at Tencent. And then before that, in the traditional finance world, in investment banking in the US and UK. And Alpha Finance, I can give a quick introduction, right? It's more of a blockchain lab where we build a number of products to close market gaps on blockchain. And now we have two key flagship products, Alpha Homora, with more than 1 billion total value lock, and Alpha X, which is in public testnet.
Fantastic. We will talk about that in a second. Nicolo, please introduce yourself.
Hi, I'm Nicolo. I'm Director of Strategy at the Aave companies. I spent some time beforehand in running growth for some SaaS startups, and also spent some time in traditional finance investment banking in London. And yeah, I've been in the space for around 5-6 years, and excited to be here.
Fantastic. Allow me to introduce myself as well. Maxime said already, I'm the co-founder of Dashnext, of Futerio, our consulting company. And just now we are launching a new company that is called Space. It's a metaverse. And the goal of this metaverse is to take the metaverse out of the gaming realm and essentially just build a 3D internet, have a commerce-focused metaverse. So I'm super excited where this is all going. I gotta say, guys, I had a lot of fun in 2021. It's like every time you think blockchain is going fast, you just wait 1 more month and things are even more crazy. So I'm very happy. In this sense, I gotta say, for me, DeFi is a bit, it's so May 2021, and I feel the market has gone already, so like to some other levels. But let's help our audience. Tasha, can you explain DeFi in simple terms, like let's say to your mom?
Yeah, so I'll try to keep it, not too long by simplifying that either. But I think the good thing to differentiate is more of the product itself and the token, right? I think a lot of people kind of combine them together. So I would start from Bitcoin itself, even though it may not be related to DeFi as much. But Bitcoin started out as a blockchain, which is a product, and a token, which is, Bitcoin token that people trade, right? So this Bitcoin blockchain, pretty much, you can think of it as an infrastructure. So very deep, behind the scene, right? But this infrastructure is made to process the Bitcoin token transfer. So this is pretty much the first time where people can actually transfer anything to another person without going through the central entity, right? So which is, pretty big breakthrough. So that's Bitcoin, right? And then moving on to Ethereum. Now, Ethereum is also a product, which is the Ethereum blockchain, and then the Ethereum token, which is the ETH that people trade, right? And now Ethereum blockchain says that they don't want to just process, the token transfer itself. It's similar to Bitcoin, right? But it actually going to process anything that is coded in Solidity. So what that means is pretty much, if you can code anything in Solidity, you can run on Ethereum, and you can have that as, a new product or even a new service. So that became, a whole new idea of, hey, you can actually deploy or write so many applications using Solidity and deploy on Ethereum blockchain, and have that run in a very decentralized way without going through, the central entity. So as you mentioned, like in 2020, we have the DeFi boom, right? And pretty much what DeFi boom, what that means is more of a lot of the, developers are starting to come up with ideas to, write financial applications and services, deploy on Ethereum, and these financial products can be accessible, globally. So I think that's, a very high level of understanding DeFi. And I think the main categories of DeFi now can be broken down into like three main areas. One is more of the lending, borrowing, yield farming area. So what that means is people can actually deposit their cryptocurrencies, like permissionlessly, right? And they get lending interest rates for lending their assets. Anyone can borrow these assets. And then vice versa, the second category is on the trading aspects. Oh, hello, can you hear me?
Yeah, we can hear you. Now you seem to be stuck, Tasha, or is it me? Nicolo, can you hear me?
I can hear you, yeah.
Okay, Tasha got stuck in DeFi. I hope it's not too bad. Okay, so DeFi, to summarize again, it's like we can build financial applications without middlemen, and it's lending, borrowing, it's trading. And for the third one, we are waiting for Tasha to be back. Tasha, are you back? You're muted. That. No worries.
Yeah, internet is not great here at the moment. So yeah, I think I explained until like the lending side of things, right?
Exactly. Yeah, and lending, trading, and we're waiting for the third one, you said.
Yeah, the insurance. And I think all of these things are very interesting because people can access these financial products and services in a decentralized way, right? And globally as well. Yeah, and I think that is, very high level and good enough for the introduction of DeFi.
Good enough for your mom, you think, yeah? Yeah. I'm still struggling. I gotta say, guys, my mom keeps asking me, like, is it legal what you do? Like, why don't you get a real job? But the years pass by and she's getting better and better with it, I have to say. Nicolo, Tasha just mentioned lending. I guess that's something you know about. So can you tell us a little bit about Aave? Like, what is the vision for the company?
Yeah, for sure. We don't usually refer to it as lending. We tend to think of it more as a liquidity protocol. But essentially, it's a decentralized liquidity protocol built on the Ethereum blockchain. It's the biggest DeFi protocol by TVL, so we just hit 31 billion in market size a couple of days ago. The liquidity spans across many chains and L2s. Essentially the way the Aave protocol community kind of frames itself is that it's pretty chain agnostic, so it's very keen to expand to every chain that's secure, and we kind of see this cross-chain future, and this also expands to sort of cross-chain governance as well, where we've got this cross-chain governance with Polygon, where users can sort of vote on L1, and the same governance applies to Polygon as well. But the way it works is that essentially liquidity suppliers supply liquidity to the protocol, sort of usually in the form of volatile cryptographic assets, and they then earn yield on these crypto assets in real time every block. And then you can kind of borrow stables or other crypto assets against this collateral. And if the value of this collateral comes close to the value of the stables borrowed against it, and the health factor, as we call it, comes closer to 1, then the liquidators can buy that collateral at a discount, which keeps the network solvent in a completely decentralized way. So you see many liquidators even running liquidation bots and making a good haircut margin on that. But there's a slight distinction, but there's quite a big distinction between the Aave protocol and the Aave companies. And we essentially built the Aave protocol a while ago and now pretty much have a very minor involvement in its day-to-day operations because it's very much a fully decentralized DAO with a very active governance, and we're just some side contributors to it. But there's a really active community, there's a grants DAO, there's a risk DAO, and it's very amazing to see it all operate on its own. And we're sort of a software development company which initially built the Aave protocol, but now sort of since we created the foundations for a DeFi financial ecosystem, we're now kind of looking to apply the lessons we learned and the kind of playbook that we built from the Aave protocol to exploring other areas, including at the moment we've got a sort of social graph protocol in the works, which will kind of revolutionize the way that people make connections and how you kind of transport these connections across different sort of mediums. And we hope that this becomes sort of a new primitive for social on Web3, essentially.
Oh, fantastic. Would love to hear more about the last thing you said. When is that going to be released, the social part, social protocol?
I can't say very much about that, but I can say actually Stani gave a good talk at LizCon a couple weeks ago, so you can see a little bit of Alpha League there. But it'll be awesome when it comes, I promise.
Yeah, I guess so. Making us excited, and then it's tough. But maybe you can help us understand a little bit more, like in contrast to the traditional financial markets, like what do decentralized liquidity protocols do, or where is the difference in your opinion?
Yeah, so I'd say one of the biggest differences with DeFi and traditional markets or traditional financial markets is that sort of there's no contract or lending agreement with the counterparty when you so you basically just interact purely with the software in the pool, and there's no negotiations. It's just code, which basically means that it's infinitely extensible and composable as well. So we kind of think about it in the space as money Legos, in the sense that you can chain these DeFi protocols together and make really complex and exciting sort of new applications of these by taking liquidity from Aave and staking it in another network, and then taking that stake token, doing really exciting things. And I'd say another difference with traditional finance that doesn't often get talked about, and I think is one of the really core differences between sort of CeFi liquidity and DeFi liquidity as well, and also traditional finance, is that in DeFi everything is completely transparent and every single transaction can be fully surveilled, which means that contrary to your average sort of financial institution, where you have no idea about their solvency, you don't know how their sort of how their operations are run. In a DAO, in a decentralized protocol, it's almost as if you kind of see everything that's happening behind the scenes. Kind of think of it more as like DeFi is the aquarium and CeFi is the black box, right? And any user can audit the code. The code can be audited by professionals or not, and you can sort of make your own judgment on whether you trust this protocol to stay liquid, or you trust all these different parts of it. You trust the direction it's heading in because the governance is fully open. So I'd say there's plenty of very exciting benefits to it, for sure.
Cool, thanks for clarifying. Tasha, tell us a little bit more about Alpha Finance, please.
Yeah, so as briefly mentioned earlier, we are a blockchain lab. So pretty much we started out in DeFi, right? And the vision mainly is that we believe in blockchain technology, and we all don't know, right? Like where blockchain will go and how fast, right? And I think because of our belief that we believe in the long term of blockchain technology and what it can bring to many industries, we want to be able to keep up and innovate as we grow, and as a result lead different segments and industries on blockchain, right? So when we started out in 2020, we started out in DeFi and we built Alpha Homora, came up with the leverage farming concept, and now we also have Alpha X as the hedging product. And as you say, 2021 we kind of entering into the NFTs and metaverse, and now we're experimenting. I would not call it more of a flagship products. It's more of experimenting to see how we can innovate, right? If you compare it to the traditional companies, you can think of it as exploring the new S-curve, pretty much. Mainly the DeFi products are the original S-curve that we already have protocol fees. We have a lot of users, and now in the metaverse, from different experiments that we're doing, we're hoping to build out the new S-curve for Alpha, and making sure that we innovate and lead the metaverse arm of DeFi as well. I mean, of blockchain as well. So that's on the part of what we're building, right? But there's also another part of Alpha that we're actually advising and incubating projects. So that's called Alpha Launchpad. And we wanted to leverage this know-how, this experience, to be able to help the other projects while growing Alpha as well. So we created Alpha Launchpad program, in which we advise on pretty much every aspects that a project need to launch successfully, right? From the technical side of things, product, marketing, communities, fundraising, and all of these things are like evolving all the time, right? Because whatever worked like last year doesn't work now anymore. So it like deserves the people who are on the ground at the moment to be able to know the ins and out and be able to advise these new projects. So now we have quite a number of projects in Alpha Launchpad, and we are slowly incubating and making sure we help them launch in a most successful way. The first project is actually Beta Finance, and the second project is P-Stake. So these two projects are the ones that we have announced already.
Fantastic. That's great to know. I got to say, for me also, it was the year of Loungepads. It's kind of funny how this market evolved, and there seems to be like 20 launches every day. It's kind of hard to keep up. So cool to see you guys supporting that. And I got to also say, it's I mean, most projects kind of need help in any aspect, right? Which is also due to the fact that you just don't find people right now who can run the show. It's very tough if you launch a project to have everybody you need, from tech to marketing to business. It's really challenging right now. So everybody out there who's listening to this, don't be shy, apply.
Yeah,
it's like
right.
I've talked to so many people, and everybody's like, yeah, but I have never worked in blockchain. I don't know. I've never worked in DeFi before. Guess what? Nobody has. So all of us are, just try figuring it out while we go. So this is it's an opportunity for everybody. Tasha, can you help us understand a little bit more? You mentioned the leveraged products, and I mean, you guys introduced that concept. I'm a user of the first hour, I would say, when you guys launched it. But can you explain a bit more, like what's the difference between having a leveraged yield farm and all these other leveraged products out there from the traditional financial markets?
Yeah, so to understand that, we kind of backtrack to the yield farming concept, right? Because that concept is pretty niche to DeFi itself. And it's actually very simple in a way that on blockchain and in DeFi, there is a way that people trade tokens that's different from how it works in the centralized way, let's say on centralized exchanges, right? On centralized exchange is an order book style. You put down the order, you wait for it, and then it's matched. In DeFi, it like that way doesn't work due to the time you have to wait, the liquidity and everything. So another concept came up, which is more of liquidity pools concept, in a way that there are a lot of liquidity in these two pools of asset. So let's say, for instance, ETH and USDT, right? And you have a lot of liquidity in those two pools. When anyone want to trade ETH into USDT, they can just come in here, trade against the pool, right? So a number of these protocols that does this are, for instance, like Uniswap, SushiSwap, and many more, right? So these are DEX, decentralized exchanges. And for them to be able to provide the best services in a way that anyone can come in to trade any token to another token, they need to incentivize people to provide liquidity to the pools as well. So in this case, here comes the concept of yield farming, in which there are additional incentives for people to provide liquidity to these pools, and then they will get not only just the market making fee that they would already get, but they will also get additional incentives, which usually come in, the governance token of that particular DEX project. So that itself is yield farming, right? So there are quite, high risk and high return that comes from it as well. And what we see, back in 2020 is that there are a lot of yield farmers out there that just continue to want to maximize yields, right? And they have to do all the ways to leverage up or borrow from other places to do more yield farming. So we saw this market gap and we created a leverage yield farming product in a way that, for instance, if you were to have $100 of any asset, for instance, if you were to do yield farming, you would get, for instance, $20 back, 20%. But if you were to do leverage yield farming and you borrow additional assets from Alpha Homura product, then you would be yield farming as if you have, for instance, $300, right? So the returns that you're going to get is going to be 3x as well, because you're technically like yield farming with 300, even though you have only 100. So you would get around like $60 back as opposed to 20. So from all of this, it allows users to really maximize yields if they can manage their risk as well. And I think it's very different from traditional finance, right? And I think a lot of the leverage products in traditional finance are more of leverage trading as opposed to the yield farming concept, in which you're actually providing liquidity, you're becoming market maker and incentivizing to become that market maker.
Okay, that makes sense. You mean because there is simply no yield farming in traditional finance, because you cannot even compare it, right? And that makes it like a completely different product, is what you're saying, right? And it's like something completely different to say we are leveraging up what we trade. And obviously we always tend to have over leveraged markets and to do leveraged yield farming. Yeah. So would you say it's like a bit safer in a way for the markets? Is that fair to say?
I would say it's secondary impact. So let's say if prices were to swing, drastically, right? The leveraged trading would, definitely be impacted right away. If you're, 3x long and the price just tank, then you would, just be liquidated, right? For leveraged yield farming, you're leveraging your position of providing liquidity in the pools. So the impact is secondary, because when let's say one token price tank, it will have an impact on this liquidity pool, and then eventually have an impact on your yield farming position. So I would say the impact still is there, but secondary and not as large as the leverage trading impact itself.
Yeah, that sounds fair. Thank you, Tasha. Let's talk a little bit about the risks involved in DeFi. We have like this. We have seen a huge boom and projects coming every day. Lots of these projects with anonymous founders, because not necessarily because it's a scam, just because people are scared of regulation and of everything. So it's kind of a weird market, I gotta say. And I guess we have never seen something like that, right? Where like a million projects came out where, there is nobody behind it or nobody officially behind it, yet people are throwing billions of dollars in these protocols, as if there is no tomorrow. So kind of how to mitigate risks in this environment, how to protect yourself from rug pulls. Nicolo, maybe you can start helping us
yeah, for sure,
understand that.
I mean, in a sense, the kind of permissionless nature of DeFi and the openness of everything kind of lends to that, especially like as we democratize finance and sort of allow anyone to create these really powerful financial apps. You have the good actors and the bad actors, and it's kind of up to the community and ultimately the user to kind of distinguish between the two. I'd say a big part of it is obviously auditing and trusting the right kind of people, in terms of you can go through the code yourself. Not everyone can do that, for sure, but if you kind of put yourself in the right communities and know who the right kind of if you surround yourself with people that do understand the code, or you do sort of trust only protocols that have been fully audited by auditors that are reputable, that's a very good way to protect yourself. And it's kind of something that I follow. I don't really ape into anything that's not that's not audited. Then obviously I think there's kind of I see a bit of a trend in the Ethereum community, kind of away from full anonymity a lot of the time. That I think there's some sort of differences between different blockchain ecosystems, and especially with the rise of ENS and a lot more of a sort of in-person, a lot more of a big in-person community. And I think I'm starting to kind of put faces to protocols a lot more than I used to. And I kind of, I don't really interact with many anon-founded protocols just because it's not worth the it's not worth the risk to me. And then, of course, I would look a lot at the governance and see how active it is, whether there's a good quality of discussion and all that kind of thing. But I think in general, the fact that the sort of the open ledger technology and sort of blockchain technology really does lend itself to mitigating some of these risks, because, as I was mentioning earlier, you got this sort of aquarium where everyone can see what's happening, and if there is some risk coming, it doesn't necessarily, as with a traditional financial institution, it doesn't have to be your sort of chief risk officer that notices this, where there's like one single point of failure. It can be anyone in the community that happens to come across this potential bug or this potential vulnerability. So this can definitely help to mitigate those risks.
Mm. Okay, so you're saying don't be greedy, basically, and don't go in if you don't understand it. But that actually also means, like, if you cannot read code, you know, like, should you use decentralized finance?
I think there are some really good. I'm a big believer in the front ends that are coming up now, like Zapper and Zerion, and even some of the Ledger Live stuff, where I think that sort of in the future we'll start to see a version of decentralized finance where users of it won't even particularly know that they're using decentralized finance in the back end. And I think it's about sort of trusting the right parties to do the due diligence for you if you can't do it yourself, in the sense that, like, if you trust Zapper, for example, and you trust their processes and all that kind of thing, then you can use their front end and perhaps have a little bit more peace of mind that what you're going, the swap decks that you're using to swap your assets might be a audited one, because maybe. So I think it's about sort of abstracting away the very complex parts of DeFi where inexperienced users may trip up, and having these sort of intermediaries to sort of protect against that. So maybe you might have someone like Zapper that says, hold on, are you sure you want to make this trade? This is not something that people usually do. You might be making a mistake here. Whereas we kind of leave the raw protocol front ends almost as a reference UI for developers and people who really understand the tech.
Yeah, all right, fair enough. I mean, it's always easy to say, to kind of, we're talking about how can you protect yourself, yet on the other side there are people who really want in, right? I mean, it's hard to give them advice and say, it's like, better don't. It's like, but how can I, right? That's like kind of a question I always get. Tasha, how you see that? Is there any way, like, what is your strategies to protect yourself, especially if you're like, like a user who's not too deep into everything?
Yeah, I think there are two aspects, right? One is more like protecting your funds, because there are a lot of scams, not just scams on the project level, but more of like scams trying to hack your MetaMask, hack your account. So I think the general rule of thumb that I tell a lot of people is do not click the links, right? Because a lot of people are trying to lure you to click different links, and then that kind of is where all the bad things begin. And then on the project side, I think I also agree with Nicolo in a way that there are a lot of reasons why projects become anonymous. A lot of them are scared of regulations, but also a lot of them are here for the quick win, right? So I think if you are using the projects run or operated by anonymous founders, then making sure you cross-check your friends, the people in DeFi, or even use the protocols that have been around for a year plus, right? And I think that can be like the general rule of thumb to protect yourself.
Mm-hmm. Yeah, that's a good tip.
So,
I mean, go ahead.
No, I was just going to say, yeah, as Tasha mentioned, like the sort of battle-tested nature of some protocols is also very important because, you know, something like the Aave protocol has been functioning perfectly through many very volatile cycles. And if you see that, like one of the best metrics that I think we can see in sort of security and trust and safety and DeFi is how long it's been operating without problems, essentially. So I think that's a very good point, for sure.
Yeah, that, and I would add like how a team is able to handle if, you know, shit hits the fan. I mean, it's very much a matter of operational like process in place and of, you know, fail switches in place. And to be fair, you know, it hits you like a train, I guess. If you're in the project and you're, you know, consider you're not a scam, something goes wrong, it's like, oh my God, it's like you might have a night shift. I heard some stories, you know, where then the internet is suddenly like gone and you're like, oh my God, what can I do? We have to move the team to another city and stuff like that. So it's very tough, yeah, but that's at the end of the day, I think where a lot is differentiated between a good and a bad project. Moving on to, you know, like to the future of blockchain, what I'm observing is the kind of, I would call it the DeFi pattern, where, you know, it all started on Ethereum. We were discussing the essential building blocks, you know, that are kind of always there when you have DeFi coming up. But I seen this pattern is now repeating on kind of multiple blockchains, right? It's like, how many are there now? There's like, I can do DeFi on 10, 15 different blockchains probably now, and it's kind of super hard to keep up. I mean, this is why probably this Deegan people are always aping into the latest stuff, because there's just so much opportunity right now. And now, as I mentioned before, DeFi is like, so, you know, it's like so April 2020, and we are now, you know, in 2021. We've seen metaverses coming up, GameFi models with Axes taking off. Tasha, you mentioned it before. Maybe you can start. Where do you see it going, and how do you see DeFi coming together with that?
Yeah, so I think you know, GameFi is very interesting. It's more of like, in my opinion, like a more fun way to earn yields, right? Like people kind of get used to there are multiple ways to earn yields in DeFi, and they're getting repetitive. So I think this is kind of like creating a new whole set of innovation and unlock creativity, not only just the developer themselves, but also the users, right? So that's just how I think of GameFi in general. But I think the timing is also a matter. And I think the timing now is actually like ready for GameFi somewhat. And I think that's mainly because of how generally like users in DeFi are getting, they're pretty much like accustomed to the user interface of, you know, MetaMask and you know, confirming transactions and all these things, right? So once we have that large user base and a lot of wealth and capital from DeFi, generated from DeFi already, so now I think the foundation to kind of explore new industry is there, right? So now when GameFi kind of integrates finance and a way to earn yield in a more fun way, it just naturally, you know, transition this foundation over to GameFi, right? But I think what's going to be interesting is how the two industries intersect and also, you know, integrate it, right? And I think there are going to be quite a number of ways to integrate as well, especially where, you know, all the NFTs in these games can be used as collateral in DeFi, and, you know, you actually have, you know, one big universe, which you may not know it's, you know, which part is DeFi, which part is metaverse. And I think generally it's just going to be continue to grow when that integration happens.
Yeah, great point. As I said before, you know, we are working on breaking down this difference. For me, honestly, you know, the metaverse and, you know, the internet is actually not so much of a difference. It's just a different front end at the end of the day, right? And honestly, I was even thinking that. I remember when I did my first yield farming, like what was that, like somewhat 2020. I was thinking, you know, I was like, why doesn't someone make a Farmville front end for exactly this? Why do I have to click in a 2D environment, you know, deposit here, take out my yield here button? And now suddenly it's there. And I find it kind of funny actually that now you introduce a time element, which is, I have to invest time to play this game in order to get out my yield on the NFTs. So it's kind of the same principle, but introducing a new element. So I personally find that really funny, and it leads to a completely new situation. And I'm seeing, like jobs market popping up. We are seeing millions of people suddenly in Southeast Asia just investing time because, they are playing not even for themselves, they're playing for other investors that, give them scholarships and everything. So I think that's a very crazy development that is happening right there. Nicola, what do you think about that, and what do you have to add?
Yeah, so I think these sort of GameFi play to earn movements, sort of DeFi is ultimately one set of primitives for the Web3 economy. And gaming, NFTs, metaverse, these are all kind of concepts that in traditional finance wouldn't have really been served well. The experience wouldn't have worked anywhere near as well, and can't really be translated. And I find all of these sort of play to earn apps a really great new application of this Ethereum sort of native store of value code, where for the first time it really helps these the platform to kind of be aligned with the user. Because in Web 2 you are kind of the product, and games and platforms, they sell your attention ultimately kind of at your loss. You'll get interrupted by games, by ads. Your data will be sold, and you'll start seeing weirdly targeted ads everywhere. In Web3, you can kind of finally align the incentives with these tokens in games. You'll be able to kind of buy in-game items with your sort of time spent, and then sell these items on to people. And it's kind of like when the platform wins, the user also wins for sort of the first time ever. And then the user can kind of get involved as well and improve the platform through the DAO and really do some really, really exciting things. And I'm really excited to see how this goes, and to see this built into more and more games, and see if we can kind of build this whole metaverse where there's also this transfer of value, and you can sort of wear your digital clothes and show off your personality both in game and out of the game, and then also kind of potentially even earn a living in the metaverse.
Yeah, I'm really lost in that topic right now, because it's like so interesting, right? I can recommend everybody who's watching this. There's a fantastic documentary on Eve's Online, which is probably the largest kind of game economy, which was obviously non-blockchain and non-crypto, and now kind of taking that same principle with owning everything in a metaverse or in a game and being able to trade that on secondary markets is just it's so big. If you just look at what already happened in these gaming economies in the last 10-15 years. And it's also, there's a big gap, in my opinion, when I talk to people who are gamers, and everybody who has went into an MMORPG usually lost a couple of years of their life, and suddenly realized that the girlfriend left 3 years ago, and okay. So these people immediately get it, right? Everybody else hey, what is really happening there? So it's really funny. So everybody who didn't see it, check out that documentary on Eve's Online. It's really mind blowing, and now think what is going to happen in the next years. Yeah, I guess at this intersection we will see a lot between DeFi, GameFi, and everything. Tasha, where do you think is DeFi going right now? Where do you see the biggest challenges at the moment?
Yeah, I think there are two to three main challenges that I see, right? One is, as mentioned earlier, I think blockchain is super early, and Web3, or the applications on blockchain are very early, right? And I think to make sure that DeFi stays relevant and grow with blockchain, I think DeFi should also evolve with the whole industry. So in this case, now we have the new growth of metaverse. So the huge challenge would be, how do you find the angle in a safe way as well to integrate DeFi and metaverse, and eventually grow DeFi in that realm. And I think that itself also leads to the second area of challenge, which I think people in DeFi 1.0, or pretty much what we went through, right, in which there were a lot of founding building blocks and people chasing yields. generally just leading to people having low retention rate on different DeFi products, right? And I think this challenge is pretty much needed to be solved, right? Because obviously it's not sustainable to always, crave for the highest yields, and the product itself is also not sustainable. So increasing that loyalty and retention rate, I think, is also the second challenge for DeFi products, which is somewhat intertwined with the first point, because there might be an angle that metaverse or gaming or NFT can help, increase that loyalty of the DeFi aspects.
Yeah, it's interesting. You're right. I mean, looking at the traditional financial world, it's also super boring, right? I mean, whoever, had fun kind of going into the bank and checking out the latest bank products. It's a bit of the same in DeFi, right? So the moment you introduce a gaming element, everything is changing, but then it also becomes kind of a weird financial product, doesn't it? Nicolo, what do you see right now? Where's DeFi going? What do you think has to happen, or a couple of things that you're going to expect to happen next year?
Yeah, so I think there's going to be sort of more of a focus, as I was mentioning, on sort of front ends and usability. I think all these protocols that are being built now and that are being sort of battle tested are more sort of the fundamental baselines of DeFi. And I think protocols like Aave, like Uniswap, will be in the future thought more of as sort of reference UIs. The user won't really be interacting directly with that. But I'm really excited to see sort of more development of composable front ends to expand the user experience, make it easier for them. Something like DeFi Saver that kind of aggregates all of the different liquidity providing protocols. And I'm also very excited about the sort of L2 movement, because the gas at the moment makes a lot of this DeFi world inaccessible to many types of users and many demographics. And for example, on the Aave protocol, it doesn't make sense to deposit more less than maybe, I don't know, at a minimum $10,000 or something to try and to take advantage of the yields on stablecoins. Whereas on Polygon, you can get started with anything like or any amount at all, right? Which means that we're starting to see a lot more users use these L2s. So for example, on Aave, I think we've got something like maybe 100,000 unique wallets on L1, but just on Polygon alone, it's something like 500,000 or 600,000, which means that we can see a lot more exciting and new applications that previously maybe didn't even make sense from a gas perspective, but now we can do much more exciting things with quick and easy deposits and withdrawals. And then, yeah, the other thing that I think might be a challenge is making it super easy to on-ramp, and both in a kind of fiat to crypto way, but also how to on-ramp the user in a way that they won't be harmed, as we were talking about earlier, and won't be sort of scared from the DeFi ecosystem as a whole. So if we can on-ramp the user both with education and with good CeFi institutions or CeFi companies, then I think that's kind of the way to go, and that's what we should be aiming for.
Yeah, great point. And frankly, it's like one of the things, I mean, just the nut we're kind of slowly cracking, right? You just said it, it's 500,000 users on Polygon is what you just said, right? Compared to 100,000 on Ethereum. So that's massive, but at the end of the day, it's still small numbers, isn't it? And at the end of the day, I feel it's, I mean, it's exploding in a way. We've seen so much, we see so much money coming in, yet even from the crypto people, I gotta say, I mean, I'm talking to so many people and asking always the question, like, have you tried DeFi? And still the answer is mostly no. And one of the main reasons is people are just too lazy to install MetaMask. That's kind of the truth, and scared of using it. I mean, if I can give one advice, it's sit down and try it, invest 2 hours of your life, check a couple of YouTube videos, and do something simple. Just install the MetaMask wallet, transfer something there on whatever chain it is, right? Most likely, I mean, Ethereum is cool, but if you have a couple of bucks to transfer there, maybe use Polygon or something else. Just try it out. That would be my advice. Tasha, I think we're almost at the end. What is the advice you would give to any newbie in the space? How did you start, or how would you start now looking back?
Yeah, I think first thing is pretty much the mindset first. I think a lot of people are feeling that they're too late, right? And that kind of prevent them from getting started. And to be honest, it's very early. And even if a year later, it's still going to be early because DeFi will look very different a year from now than what it is at the moment. So I think once you understand that we're all super early in the space, and then it's just more of educating yourself. Like you mentioned, there are a lot of resources on YouTube. Recommending Bankless as the platform that you can start with, and then starting with a couple of bucks, maybe not on Ethereum because the gas fee is like pretty high, and then just using basic protocols, right? Like lending protocol, making sure you understand what it is, and then you kind of repeat that process and expand the product that you integrate, that you work with, and then that's just the whole like iterative process. There's not going to be an end stop to this learning of DeFi because it's always evolving.
Thank you, Tasha. Yeah, absolutely. I got to learn from you too, I got to say, because I constantly have the feeling of being way too late. And probably it's not the case, right? You think like, oh my God, this is 6 weeks old already. Is it even fancy still? Guys, thank you so much for the conversation. We can go on forever. I think that's the last session of the day. So thank you everybody for joining. Thanks Atato for inviting. That was amazing. Any last words, Maxime?
Yes, and first, thank you, the three of you. Actually, it was a very interesting discussion. You are, I mean, for Aave and Tasha, you are one of the biggest DeFi protocol out there. To have you on the panel on East Bangkok, it's a really great honor. We had a lot of students, a lot of people from Vietnam, Philippines, Indonesia, and also Thailand, obviously, coming. So it was a great one. So thank you all. Thank you, Felix, for moderating it. I recognize your DeFi style in your questions. So thanks a lot for everyone. So it's okay. I'm going to wrap up quickly the event for everyone. And thanks for joining all along the day. We started early this morning with actually a lot of different subjects: decentralized finance, NFTs, blockchain for enterprises, the Ethereum Foundation grant program. So we tried to wrap up the whole Ethereum ecosystem in one day, which is almost impossible. And yeah, so we're going to put all the recording of the sessions on our YouTube channel end of next week. So if you missed any session, you would like to contact any attendees, you can actually contact us at Atato. So we will be glad to have you. We are a custody company. We offer digital asset custody for businesses. You can already go to our page and sign up online. We are going to send you some promotional vouchers for everyone. So thanks again. Next year, hopefully we can do this event live in real and not online anymore. So yes, that's about it. Thanks again, everyone. We really appreciate you joining us for this event. I hope you learned something, and please go download MetaMask, try decentralized finance if you haven't. You go to check NFTs and everything else. The space is changing every single day, and yes, we are here at Atato, happy to guide you in this space. If you wish, feel free to contact us. Thanks again for all the organization, for Cebit in Thailand for organizing this webinar, for the Ethereum Foundation actually to helping us financing this event. So thanks to all, and we see you next year. And for the one who wants to learn more about blockchain, you can check Bangkok Blockchain Meetup. We do those events every month, always free, always online. So feel free to join. Thank you all, and we see you next year.